As we reach the end of the year, it's time to start thinking about one of the most overlooked year-end reporting obligations for anyone with foreign financial accounts, the FBAR, or Report of Foreign Bank and Financial Accounts. If you're a U.S. citizen, green card holder, resident, or business entity with financial accounts outside the United States, and the total value of those accounts exceeded $10,000 at any point during the year, you're required to file an FBAR. The form isn't filed with the IRS. It goes directly to FinCEN, the Financial Crimes Enforcement Network, but it's just as important, and penalties for failing to file can be severe. So why are we talking about this now before January? Well, you probably just wrapped up last year's tax return filings. Did you remember to report your offshore accounts on an FBAR? What about the interest and other income items you earned from those accounts or elsewhere overseas that went into those accounts? Did you report those as taxable income on your tax returns too? If not, then not only are you not in compliance because you didn't file your FBAR, but your tax return likely wasn't filed right either. It's also important to remember that FBAR compliance often overlaps with other reporting requirements like Forms 8938, 8621, and 3520. If you suspect that you did not file FBARs or did not correctly file your tax returns, you may be eligible for certain IRS programs like the Streamlined Offshore Procedures or Voluntary Disclosure Program. These programs can help taxpayers get into filing compliance with the IRS and put past mistakes behind them. Generally, now is the time to review your prior year tax returns to see if you made mistakes before the stresses of the next tax season arrive, and accountants are so busy they may not have the time to help with past cleanup efforts. Getting ahead now allows your CPA or tax attorney to coordinate these filings together, which can save you from errors, duplication, or misdisclosures later on. Here's what you should be doing right now. First, identify every foreign account you have a financial interest in or authority over. That includes bank accounts, brokerage accounts, pensions, and every business accounts where you have signature authority. Then, gather your statements for the year and make note of each account's highest balance. Convert those figures to US dollars using the official year-end exchange rates. If your total across all accounts ever exceeded $10,000, you'll need to file an FBAR. If you already know you'll have to file, now is the time to engage a professional to handle it for you. If you're unsure or think you might have missed FBAR filings in prior years, this is also the perfect time to talk to a tax professional about voluntary disclosure options or streamlined filing procedures. Acting now gives you options. Waiting until later limits them. At Gordon Law, we help clients navigate the intersection of international finance and U.S. tax law every single day. Our team works with individuals and businesses that have cross-border accounts, cryptocurrency exchanges abroad, or complex international holdings. FBAR compliance may sound technical, but it's really about protecting yourself from unnecessary penalties and showing transparency to regulators. The takeaway here is simple. Don't wait until tax season to think about your FBAR. By preparing right now, you'll make the process smoother, reduce your risk, and ensure your disclosures are complete and accurate. If you'd like help reviewing your accounts or determining whether you need to file, contact our team today. And if you found this helpful, make sure to like this video, subscribe to our channel, and click the bell so you don't miss future updates on international tax and compliance topics. Remember, a little preparation now can save you a lot of stress later. See you next time.